Shri Krishnakumar, MD at SBI, joins us now on the show. Mr. Krishnakumar, hi. The Finance Minister has allocated about 11,200 crores for PSB's recapitalization in FY15. How much of that do you think SBI would require, and what are your fundraising plans for the next year?
Well, as you are aware, we just finished our QIP, and also we have received about some money from capital from the Government of India as well. So at that, taken together with the expected flowback of profits in the current year, I do not expect that we need any additional capital going ahead till FY 2015. But if the government, as in the budget, the Honourable Finance Minister has allocated about 11,000 crore of capital, I'm sure some proportionate share will come to us also from that.
Mr. Kumar, asset quality pressures are still a big problem for State Bank of India. So what are the strategies? What is the thinking with the top management here? How are you planning to address the NPA problem?
As we discussed in the press conference and the analysts meet post our Q3 results, we seem to think that we have a handle on the stressed assets in the retail segment and also to a great extent in the agriculture segment. The problem comes up only in the mid-corporate and the large SME, which are like mid-corporate accounts. So we are taking a conscious decision on a case-to-case basis on how we go ahead with handling such accounts, whether we restructure them or whether we go in for a hard recovery depending on the circumstances of each case. But in the mid-corporate and in the large SME, there will be some stress, as we have indicated in the analyst meet and the press conference also. There will be some stress going ahead, but I think maybe in a couple of quarters we should have seen the worst of it, and maybe in a couple of quarters from now things would start looking better.
There are some reports that SBI may be looking at selling, bad assets to ARC as well. Could you elaborate on these plans? And we also saw significant write-offs in the third quarter. Will that continue for a few more quarters to come?
Well, as far as the sales to ARCs go, we are definitely looking very seriously at selling a portfolio of bad assets or stressed assets to the ARCs. It's difficult to put a number to it right now, but probably in the range about 5,000 odd crores we will look at selling before the end of the current financial year. But it depends on what type of response we get from the ARCs to the portfolio which we showcase to them. As far as write-offs go, yes, as per the extent current write-off policy of the bank, we'll certainly try and clean up our books to the extent we can, and without compromising on the follow-up efforts for recovering the loans, even though they have been written off.
You've cut deposit rates. What has led to that, and how much deposit growth do you have as of now? And any changes we could see on the lending rate side, or would you maintain status quo there?
As of now, we have not taken any call on changing lending rates. But as you remember, the deposit rates which we cut were on the longer end, 3 years and above and 5 years and above for the retail deposits. That's basically, we think that there is some sort of moderation in the rate of inflation going ahead. And so in the long term, or at least in the 3-year plus term, we think that the rate of interest which we are offering right now is a fair market rate, and then perhaps many of our competitors, if you see, are also offering similar rates to the customers.
So how much growth have you seen in the home loan segment, and are you looking to introduce any further SOPs for retail borrowers? Because there are reports that SBI has turned aggressive in acquiring home loan customers from other banks.
Well, as at the end of December 2013, we had a total home loan book of about 1,35,000 crore of rupees, which obviously is the highest in the industry as far as home loans go. We expect that going forward, during the current quarter ending March 2014, we should grow by another maybe 6,000 crores or so in the home loan portfolio, bringing a total of about 1,40,000, 1,41,000 crores. Our interest rates are right now very, very competitive. We have one of the lowest rates of interest in the market. And yes, we are looking at all sorts of avenues to increase our home loan book, including takeovers from other institutions. In fact, during the Q3, during the period ending December 13, maybe around 15 to 20% of our growth came from takeovers from other financial institutions. The reason we are stressing a lot on the home loan portfolio is, of course, that The size of the book is very good, as well as the asset quality is extremely good. For the quarter ending December 13, our gross NPA ratio on home loans fell to below 1%. In fact, it was around 96, 97 basis points. So it's a portfolio which is very healthy and very strong, and naturally we'd like to grow it.
Your mid-corporate SME and agri loans are contributing to maximum of the bad loans. We have seen a degrowth of loan book in a few of them. Going forward, will we see more caution on your part on these sectors?
There is no deliberate policy to degrow these portfolios. What we are doing is we are taking it on a case-to-case basis and lending with caution. As far as agriculture goes, we are certainly, as I said earlier, we think we seem to have a handle on how to take care of the agricultural portfolio, and so we will be growing the agricultural portfolios quite substantially in the next few weeks also. In terms of MCG and SME, we do not have any policy of not growing in these sectors. We will grow to the extent we can and to the extent we should, depending on the quality of each loan as we do a due diligence on them.
There are a few analyst concerns as well on the fact that your CASA deposits percentage has dropped from, the earlier 47.5% in December 2011 to now 43.8% now. How valid is this concern, and what steps are you taking to shore up your CASA deposits?
Well, the analysts have just made a statement of fact. In fact, the entire CASA mobilization in the industry has come down if you look at the percentage terms. In December 2013, we had a CASA ratio, if you remember, of 43.89%, which is the highest in the industry at that point in time. So it's not as if only State Bank of India has shown a lower percentage growth in CASA. It is the entire industry as such. But regardless, we have taken a number of steps to increase the mobilization of CASA deposits. We already have a campaign at the branches for mobilizing savings bank accounts. We have another campaign to mobilize current accounts which are linked to the POS machines which we sell. And going forward, we expect that by March 2014, we would have a substantial growth in the CASA deposits as well.
How well are you placed as far as priority sector targets are concerned for this year? Most banks are finding it difficult to comply with the requirements, especially given the change in the norms.
No, actually the norms were changed in terms of the indirect agri lending. So there have been some difficulties in achieving the target of indirect agri lending because of the higher limits being specified by RBI. But I think recently, maybe a few weeks ago, RBI has further modified the type of loans we can show under priority sector. So maybe by March 2014, we should be in a better position to achieve, to at least try and reach the target of 40% for priority sector lending. As far as direct agriculture sector goes, I think we should have no problem. We achieved the target in March 2013, and we should be doing it easily in March 2014 as well.
Mr. Krishnakumar, really appreciate you taking the time out and speaking with us. Good to catch up with you as always. That's the perspective coming in from SBI.